Hello, chart watchers, and welcome to this Monday, July 8th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got off to a rough start this morning, but the market is trying to come back a little bit, at least on the Dow. We are down 135 points. We were down a bit more earlier. The S&P 500, however, is closer to its low of the day, currently down 16 points. And the NASDAQ having a rough day today, down 75. The Russell 2000 down about 11 2/3 points. So on a relative basis, down a bit more than the S&P 500. 10-year Treasury yield, we were down a couple of basis points earlier, down one right now, trying to get through that 20-day moving average. That has been difficult for the 10-year Treasury yield for the past couple of months. Volatility index moving back to the upside after, you can see, on Friday hit a low had not seen in the past couple of months. Real estate leading to the upside today, along with energy, healthcare struggling, along with communication services and technology. A couple of areas, industry groups getting hit a little bit today. Biotechs, July, typically a strong month for biotechs, but we had a rough day on Friday, and we're following it up with more short-term selling today. We do want to watch the lows that we established at the end of June there. And then in the specialty finance group, the area is getting hit here, down about 6.5 points today, or more than 2%. This group is much healthier, though, did make a breakout above this 288, 289 level. Seems to just be going back down to test that so far. Two stocks in the Dow, Apple weighing on the Dow today, down more than 2%. But I think technically testing its 20-day moving average for the first time in the past 4 to 5 weeks. I think that's a bullish bounce so far. Boeing, not so much. Boeing, after getting through that 360 level, I wanted that to hold. Last week we went below 360, continuing to weaken today. There was a report out this morning or over the weekend that they lost a contract to Airbus, and just continuing some of the negativity that surrounds Boeing as it continues to drop. All right, Erin, it's a new week. I know you are up in the Seattle headquarters today. How's it going?
It's going very well from the mothership, as we call it, here in Seattle. No, it's great. The weather's been meh. It's not Southern California, but it's definitely got a lot of great people up here to see, so it makes it extra special.
Yeah, it's always a fun time out there. I enjoy coming out there. Good restaurants, lots of nice places to go. And, of course, you may have gone out there just a little early because the Seahawks don't play for a couple more months.
Well, mainly I came out early because, I had to taste some wine in wine country up here. So,
yeah, that always works too. All right. Well, we do have the market. And last week, I know you weren't here on Friday with me, but we did set some new all-time highs. Market pulling back from some of those highs right now, but market's been looking pretty good of late.
I have to say that you are correct, but I'm not so certain it's going to continue. We will see.
All right. Fair enough. I will disagree, but that's okay. That's always
that's what we do here, right? You and I disagree. That's how it works.
Yep, normally we do. All right, what we got going today?
All right, our upcoming schedule. Tony Dwyer is going to be with us on Wednesday. Mark your calendars. John Murphy will be here on Thursday, and the following week on Wednesday we have Martin Pring. Thursday of next week, we've got Julius DeKempener, Mr. RRG. And of course, it's starting to get here. Relative Strength Week will be starting in, 3 weeks now. All right, but for today, we have, of course, Monday setups, being that it is Monday. Tom, I know you're going to be doing a lot of stocks for the earnings spotlight. 10 and 10, our first symbol will be Ericsson, ERIC, and I will finish up the show with the sentiment update. But let's go ahead and get started. I know there weren't any economic reports, but what other news do you have for us?
Yeah, there wasn't anything in terms of earnings or economic news, but in my article today in the Trading Places blog, I did put a chart up of the 10-year Treasury yield. So figure we'll start there. And you can see we've been in this downtrend, but there is a positive divergence. You can see the PPO has been climbing while the yield continues dropping. We did get that big pop on Friday in the yield after the jobs report came in ahead of expectations. This morning, and this was earlier this morning, you can see that we were down almost 3 basis points at this point in time. But if you click on the chart, we can get the live version, and you'll see that we have bounced back off of that earlier low a bit. We're still 1.5 basis points lower today. But I normally expect with a positive divergence that we will not only test the 20-day moving average, but we'll actually break above and test the 50, perhaps send this PPO back at least to the center line. You can see how that has been much more of an issue because the overall downtrend has been in play. And anytime you have a downtrend, you tend to see your momentum oscillators in negative territory. So until we get this into positive territory, we've got to respect the downtrend that's in play. So initially, let's look for possibly a 50-day test. That's what I'm going to be looking for. That would take the yield up into the 220s, or as the 50-day drops, maybe it just gets it up close to 220, maybe even this 216, 217 area where we had the prior high. But that's going to be an area that I'd watch closely because I do think if we get through, we would have one more obstacle in place, and that would be the double bottom breakdown on the 10-year Treasury yield, which is up at about 2.36, 2.37%. But if we were to rally during that period, that normally coincides with a rally in equities. So if this positive divergence does come through and we do start to see more strength in the yield, weakness in Treasury prices, the two always move inverse to one another. But if that were the case, then I think we would begin to see some a real movement in the S&P 500 and break above that 3,000 level, which we have yet to do. All right, again, no earnings today, so let's take a look at a couple of other areas. I wanted to start with Apple. Apple is the headline loser in the Dow today, but when I look at the chart, it's been in a nice uptrend. We had a nice rally in early June. We've continued to trade above that 20-day moving average. We've gotten the golden cross with the 20 crossing above that 50-day moving average. And today's weakness, even though you never like to see one of your stocks down, Apple is still holding above that 20-day moving average. So I'm okay with it. And when you look at Apple relative to the computer hardware group, Apple on a relative basis actually broke out to a 52-week high just about 3 weeks ago and continues to trade near that level. So I'm still looking at the Apple chart pretty bullishly, even though it is struggling a bit today. Next up is Boeing. Let's pull up Boeing, take a look at what's going on there. Not a fan here. And when you look at the relative strength, you'll see why. Boeing literally today is moving to an 8-month relative low and not too far from a 52-week relative low versus the aerospace group. And you can see versus the S&P 500, it is darn close to that 52-week relative low. So the fact that Boeing broke out and got above that 20-day moving average, got above the 50, got back above what was a key pivot area, I could have supported a long position, but when I see relative weakness, I keep a tight stop. Can't really justify this move back below 360 with the relative strength dropping. So Boeing for me is an avoid right now. Boeing's got some work to do technically on their charts, not to mention build some confidence with its 737 MAX planes. All right, 3M. 3M is another one that I would be really careful with today because it is breaking back below the 50 and 20-day moving averages for the first time in about 3 weeks. And look at all the selling that took place in 3M. I mean, we had a big move to the downside here, heavy volume. Look at the relative strength or relative weakness, really, of 3M versus its peer group. 52-week low, it's getting almost no bounce whatsoever. And now on its daily chart, I mean, the only reason it bounced, in my view, is that the overall group was bouncing. So it just went along for the ride. You can see that down here. No relative strength versus its peers. So the group bounced, 3M bounced with it, but now all of a sudden, here we go, rolling over again, losing moving averages. Not a fan of what's going on here in 3M. Goldman Sachs, it is starting to show some relative strength here. And this is interesting because July tends to be a good month for Goldman Sachs. This is a month where we tend to see some relative strength in the stock. I think I also mentioned that in the article that I did this morning as well. I know I looked at it. No, I did Cisco today. Cisco also, by the way, has relative strength in July. But Goldman Sachs is showing relative strength, and it did just last week break to a high, at least on an intraday basis, up near 210, that it had not seen since back in November of last year. Goldman Sachs reports earnings next week, and it's starting to show some strength. It'll be very, very interesting to see how that earnings report comes out. If it's a good report and we get a positive reaction, I think Goldman Sachs could be back into a relative uptrend, which would be very good news for the stock. As you can see, it has struggled for quite some time, not only versus its peer group, but look at it relative to the S&P 500, something to watch as we go forward. One other area I wanted to mention was the toy group, and I talked about this last week and talked about the breakout. And one problem I have with a group, and it was coming down, testing its 20-day moving average, looked like it was testing price support, and I thought the group overall was looking much better. But you can see today more weakness, back down below that 20-day. It would be great if we reversed and could finish back at the high of the day today. But barring that, I think you have to be careful, because when I look at the relative strength of the industry groups, and I'm going to pull this one up, toys, let's see, here it is. It was starting to show strength, but look at the turn back down at this 20-week moving average. This is a group that's been underperforming for a year. So yes, it was starting to show some relative strength, but this is the type of group you want to be really careful with in the event it starts to roll back over again, because money has been rotating away from this group for almost a year. So not a good group. It was starting to show some nice strength, breakout. You don't want to fail to hold this support level on the pullback. So I think toys is an area where you really want to be scrutinizing it closely, not just today, but perhaps throughout the week. Started to show strength, now rolling back over. That is not what we want to see on this relative chart. Okay, I'm going to go into, let's move over to the dashboard, and under the technical rankings, I wanted to go over MAXR as our scooter mover today. You can see it's up 30 today to 79. That looks great, right? But when we look at the chart, and I'm going to update this, the stock's down 1% today. So how can the scooter be going up when the stock price is going down? Talked about this before, but it's always worth going back through and mentioning. You might look at it and think there's some sort of an error, but there really isn't. I pulled up the rate of change for 125 days and the rate of change for 20 days. If we go into the chart school, you will see that under the long-term indicators, the 125-day rate of change is weighted 30% of the scooter score. That's a pretty hefty weighting. And if we go back and we look at the 125-day rate of change, it spiked today. And you say, well, how can it spike when it's going down? Well, it's where it is versus where it was 125 days ago. Friday, you can see that the stock on its 125-day rate of change was comparing this close to this close. Today, even though the stock price is going down a little bit, it's comparing this close to this huge gap down close. So the huge jump isn't necessarily, or isn't because we're doing anything today on this stock to the upside. Instead, it was what had transpired 125 days ago. So you've got to understand how the scooter works. It's not always going to track how something is doing today. It's going to track part of it is tracking that rate of change over 125 days. And you can see that is why the scooter score jumped today, because all of a sudden the rate of change is really spiking on this stock now as we look back over that 125-day period. If the ROC, rate of change, was 126 days, this stock would not have jumped today. So just wanted to point that out. And for that reason, it is your scooter mover of the day.
All right, let's get started with some upgrades and downgrades. I'm going to be focusing using our advanced charting platform, so it may look a little different than what we normally do here. Let's go ahead, and we're going to start off with Amneal Pharmaceuticals, AMRX. This one was upgraded today by Piper Jaffray from a neutral to an overweight. I was looking at this one before I came on here, and I noticed we do have this breakout above this declining trend that we were looking at, that declining tops trend line. And I also note that the PMO, which has been very, very oversold here, is rising. And so we might be getting that breakout. My only thing with this is, as far as upgrading it, I probably wouldn't touch this, mainly because of the look of these EMAs. Your 50 is so far below the 200, as is the 20-day EMA, which has also got a lot of margin up to the 50-day EMA. But we are seeing a breakout on this particular upgrade. Next one we're going to look at is JetBlue. And Credit Suisse actually looked at two airlines today. The upgrade goes to JetBlue, as I was just mentioning. Let's look at some overhead resistance that is lined up here. And look at how these two tops right here totally line up with that end of November top. And then we've got the top back here in June. And we're making our way up there. This has been a nice runner. It came down off of this 50-day EMA, bounced, and it's just been going up the entire time. I finally did get the PMO buy signal. So it did, admittedly, I think it did come in late, but we've got volume on this with the OBV. It still looks pretty good. I just, we always talk about not chasing, and that overhead resistance is starting to really get close at this point. All right, so we talked about JetBlue. Credit Suisse also, we're going to move to the downgrades, and Credit Suisse downgraded American Airlines today. So they upgraded JetBlue, but they downgraded American Airlines, and they went from a neutral to an underperform. So this is, we're going into the sell position here. They definitely don't like American Airlines. But, at the same time, JetBlue was an upgrade, but only into the neutral area. So I'm not sure that Credit Suisse is all that excited about the airline group. But especially not American Airlines. Now, notice you can see the difference from JetBlue, what we just looked at, which had been going on a really nice move to the upside and was continuing higher. And now we're looking at American Airlines, which honestly, I don't think looks that horrible right now. You've got the 20-day EMA moving above the 50-day EMA. Look at the PMO is still rising. We like to see those pullbacks to the 20-day EMA. So with that positive crossover, I think that looks pretty good, honestly, for American Airlines. You could even make a case, I think, for a flag if you'd like. But I would be watching that 20-day EMA very, very closely. If we dropped below there, at that point, I'd say, yeah, let's leave American Airlines alone. But you could make that a pretty tight stop. They moved their target from $32 down to $30. So they're looking for a pretty sizable pullback toward that low that we saw back in March. All right, we got three more, but so we're going to whip through those pretty quick. First of all is Apple, and you talked about this a little bit at the head of the show, Tom. We're coming back down to that 20-day EMA, just like you said. Now, Rosenblatt upgraded it or downgraded it from a neutral to a sell, and their target is 150 now. Let's go ahead. I've got that horizontal line, so let's put that right in there. I'm looking at support at about 170. I mean, I think you could certainly look for it to hold there. And also, now I'm looking at this with, if you get the trend line going here in the shorter term, it's holding so far. That rising bottoms trend line is just barely holding. We got the gap down. You could very well see it's sitting on the 20. It's sitting on that rising bottoms trend line. You could see I could see an island here as a possibility for Apple. So despite the downgrade, and Rosenblatt moved it to a sell with that very low target. So that's a little bit concerning there, I guess. But I like it. I don't think that it's that bad. At this point, you're looking right now at F5 Networks. They were downgraded by Goldman from a neutral to a sell, and they moved their target from 165 to 120. So they're, pretty much off of this chart right now. There we go. So let's go look at 120, which would be down here. So that's quite a downside target that they have. I would be looking right here at that low. That's just above the 130 level. Again, I can see the pullback. You can go ahead and look at this trend line from that low and move that on up. And you can see it's broken down below that. So I would at least look for a move down to that 130 area. All right, and our last one is NTAP, Network Appliances, NetApp. This one was downgraded from a neutral to a sell. So Citigroup is putting it into, they're looking for a $55 low. So that would put us right about there, 53, 55. We can move it up a little. They're looking right here at that low, though, clearly, possibly the earlier low right in there at $58. I would look for a continuation to the downside. We've managed to this does look like a rising wedge, even in that little space that we have here. So, I can't get overly excited. PMO is trying to turn back down. It had the buy signal, but it's starting to top below the zero line, which is also not a positive that you want to see. So that is it for your upgrades and downgrades. We will be right back with our Monday setups. You can see who's doing the best this week.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
All right, time for our Monday setups. But before we get started on this week, Tom, we need to see how we did last week. I'm going to go ahead and share my screen. I was in WMB, Williams Companies here, at 28, what was it, 28.22. So it's at 28.41 right now. So we've got the upside movement. But look, we are holding right above that $28 range. I think this is still a good pick. Look at the PMO, it's rising nicely. You can see that especially in the thumbnail. And OBV volume is still behind this particular stock. So I still like Williams companies. And then you had LHX at 184.
Yeah, there was some confusion about this one last week too, because it was the first day that L3 and Harris Technologies had combined. And so I think what we had done is we pulled up a price on LLL, which we can't pull up anymore because it's no longer in existence. But it had not changed from the close. So we looked back after the show and kind of guesstimated where LHX was at the time of the Monday setup, which was right about 184. And yeah, it's up, a little more than 0.5%. I think your WMB was up about the same. Mm-hmm. And so maybe a little bit of a stalemate, I guess, for
as long as both on the positive, isn't that
Yeah, and honestly, that's about what the S&P 500 did. It went up a little bit during the week, pulled back, and by the end of the week, where we are right now is almost exactly where we were last week. We might have been up, 0.25% or something, or maybe even less than that. So, we kind of went along with the market, I guess. They weren't bad picks, not great picks.
But I feel okay about it. Like I said, I think it's still a hold, at least for me.
Yep. But what do we got for this week?
Yes, what do we have for this week? Okay. I have about 5 that I'm going to show you. AIG, and I believe I put this one as my poll pick, one of the 2 poll picks. You're getting a little bit of a breakout. PMO, you can see, is rising, getting ready to get that buy signal. It turned up well above the zero line, which I like. Scooter is still looking pretty good. I didn't make it my pick mainly because I do see these declining tops on the OBV. Volume's still maintaining. The OBV is still moving sideways, so it's not a horrible thing. But you can tell we are still having some problems here at that overhead resistance from that June top. So I did include it. I think the financials we're going to start seeing a little bit, they're going to probably do a little bit better. I know that the group itself has been turning around. So I thought that one would be a pretty decent pick. And again, now here we go. Also in the financials, Ameriprise Financial was one I was looking at. I think this one looks pretty good. We've got that declining tops trend line in the short term. It's busted up above that. It has broken above that 20-day EMA. I think there's some pretty nice upside potential here. Look at the OBV, all that volume that's collected here in the beginning of July last week. And then we have the Scooter It's still in the hot zone, but it's even broken a declining tops trend line. So I thought AMP looked pretty good. Public storage was the other one. And you've got rising tops on this OBV. So that's a little bit different than what we were just looking at. We want to see those rising tops along with the price tops. And you can see we're trading now above that overhead resistance, but it is still looking like it's having a little bit of difficulty getting back above that overhead resistance. So I didn't make it my pick, but I still think, let me make that so everybody can see, PSA. You've got the PMO rising. You've got a scooter that's now in that hot zone. And again, like I said, I think the OBV with these tops rising in conjunction with price looks pretty good. I'm going to skip Ring Central because that is my pick. So let's look at William Lyon's Homes. And I thought this one was interesting. You know, it hasn't been the greatest performer, but it might be time for it to take its move up. We do have a flat PMO. When I was looking at this chart earlier, it did look a little bit better. I like this flag formation that we're starting to see in the very short term, and it is holding above that 20-day EMA. It looks like this could be the spot where we might get that breakout and execute the move above that $20 range. So, you know, with a strong scooter like this, and the OBV is doing okay here with that rally, yeah, I think that this one could be a pretty good pick. But the one I picked, and Mary Ellen is in the studio, and our other producer, Zach, and they were talking about what they wanted to put in the poll. And they wanted Ring Central. And I said, oh, no, you can't take that. I already have picked that. So great minds, as they say, think alike. So I felt extra good about making this my pick, given that Mary Ellen and our producer, Zach, were behind it. So my target for Ring Central is up here at 127. It's broken out from a declining wedge, which is a bullish pattern. It's been on a nice run. 20-day EMA avoided crossing below the 50-day EMA. So I like that. You have the PMO rising right now, and we're getting ready to move and make that buy signal as the PMO would rise above its signal line. Look at the OBV is moving in conjunction with price. I just think this one looks pretty good. And so Ring Central, and I've got it at 113.50 at this point is my stop. I'm sorry, 119.04 is the price currently. So even since I looked at it, it's already moved up. So I'm going to fix that so that it matches.
Well, I tell you what, I like it too. In my strong earnings chart list, and I actually do like that stock a lot, and I like what it's been doing. I agree with you. I think on that bullish wedge breakout, I really like it when the momentum oscillators like your PMO come down to the center line. That normally is just a good indication that a lot of the overbought conditions are gone. And so, yeah, I think this one could make a run. So you're going to set the bar high here for me this week.
Oh,
so
well, thank you.
I am going to go with a stock that I will let everyone know in just a minute. But first, I'm going to start off with my blog, because if you do go into Trading Places, there's a link here to my live chart list. And I try to update it. I know there for a while. I really am careful, depending on what the market's doing, whether or not I want to put too many setups out there. But I did update it for the setups this week. So I'll go through these one at a time. VCYT, biotechs I mentioned earlier, having a rough day. VCYT has been one of the best performing biotechs. So it's down 4.5% today, but look at the volume. It's very light. And if I just pull this chart up and put it on a relative chart, you will see that this stock relative to the biotechs has been on fire. So if the biotechs do their normal July move to the upside, I feel pretty good about VCYT being a leader in the group. And so this is actually the stock that I put into my blog as a setup. And I'm not going to include it only because as I mentioned here on this chart, you can see that it does have a little bit more room potentially down below 26 to test that recent low at the end of June. That's where I would like it better. So from a timing perspective, I'm not going to go with it. I've decided to go against it, but I do like the stock. Mercury Systems, MRCY. This one's been consolidating for a while. The PPO has been right near the center line, trying to go positive. You can see it's just barely negative here. I just think it's consolidating. It showed a lot of relative strength heading into May. And now as the stock has pulled back, tested this area of what used to be price resistance, so that becomes price support. I just think the mid to upper 60s is a good area to accumulate Mercury Systems. NCR, huge move back in May, straight up, and we have simply just been going sideways. Nice uptrend in play. I think getting this somewhere down around 29.80 to maybe a little bit above 30 represents good value, good reward to risk. And so I'd be looking for a move back up to test that 33 area. Etsy, we've talked about this stock a lot on the show. I know Erin's talked about it. Mary Ellen's talked about it. I've talked about it. It went straight up with a huge earnings report back in February. It did come down with its earnings report in May. However, I think it held a key area of support. I think it's just been consolidating after a huge move to the upside. I think if you get it toward the lower end of this range, I like it. Denny's in a very strong group last week made a breakout. It's pulling back today. We'll see whether we get that bearish engulfing candle. If we do, I think there's a decent chance we're going to go back to the 20-day moving average, possibly even to this price support area. But I think anything in this zone between about $19.75 and $21, I look at that as an accumulation area. And if you're looking for a stop on this one, I think you've got your trend line hitting 1850 and multiple highs at 1850 before we actually made this breakout, and it's some pretty good volume. So that's where I would consider a stop. But I don't know that it gets all the way back down there, so I'd be looking to accumulate a little earlier. ACC, this is American Campus Communities. I like the fact that this one's just making a breakout. Again, sideways consolidation off of an uptrend. It's trying to make this breakout. I'd like to see more volume. That's my one concern about buying it on this breakout, is it could turn out to just be a little bit of a short-term head fake. But notice this green arrow pointing to the 20-day test that this stock had on Friday. I think that's a good sign with the PPO now back above the center line and rising. Nice volume on this move off the recent low. So I think if it does have a false breakout here and we get a pullback, I think down close to that 47 level would be a very solid entry. And then the stock I'm going to go with is Chipotle. Now, one caveat, when I pulled this one up earlier and picked it, it was up at 750. And you might think, well, you're getting it at a better price, 746. Well, I want to see the breakout, though. So I'm not going to be excited if we don't get this breakout and we leave a tail that goes up to 752 and change and then come back down. I think what that would probably indicate is maybe we're going to just be stuck in this sideways consolidation a bit longer. So today's close is going to be important to me, but right now it still has the breakout. So I'm going to go with my gut that we're going to get this breakout. Volume today is already pretty decent relative to what we've been seeing in this consolidation phase. So I expect we're going to get some decent volume by the end of the day. And I'm going to count on this being a breakout. But let me get an update. Just make sure we got the price. 746.66 will be the price. So Chipotle, that's my stock for this week. 746.66. Playing it as a breakout of this flag off of this flagpole. I could see this one rising maybe another 100 points from here. I really like Chipotle. And by the way, full disclosure, I own Chipotle.
Yep, I have to agree with you on that, Chipotle. So, wow, twice already we've agreed on the show.
Yeah, something's wrong.
Everybody's going to now race out to buy these, and oh, goodness. I don't like to hear that.
Might be an indication of snow out in Seattle. I know things can be kind of rough out there sometimes.
Exactly.
Anyhow, so that is, those are your Monday setups. Erin's pick, RNG, my pick, CMG, and some others that we discussed as well. All right, it is time to go into earnings spotlight. And I tell you what, I went through a lot of stocks. Let me show you what I did here. And first of all, in this, I actually set up a chart list in the earnings spotlight folder. And when you look at this, you are going to see a lot of stocks. I can't possibly get through all these stocks in 15 minutes. But what I did was I dropped in every stock that I saw on next week's earnings list. So Not this week, next week. Earnings really start to pick up next week. So from July 15th to the 19th, every stock that had a market cap of over $5 billion, I put into this chart list. And then I went through and I set up the relative strength charts that I like to use and looked at every one of these charts to see the top 30 that I think are looking good heading into their earnings reports. Now, who knows? I'm going to actually try to remember to go back and look to see how many of these companies actually came through with some strong earnings. But I'm going to go through the ones that I selected as the 30. So we'll go through these pretty rapidly. The first one, Abbott Labs. You can see Abbott Labs. And by the way, you need to check the date. These are not in order of reporting date. So if you like any of these, just remember they do report next week. If I was going to hold stocks into earnings, I would be much more comfortable holding stocks that are showing relative strength heading into earnings. I still think you can get whipsawed and you can still see some big moves in both directions, but I feel like the odds are better stacked in your favor if Wall Street has been buying the stock heading into their earnings reports. So Abbott Labs, you can see not only the absolute breakout above this 81 or 80 level, but volume has been strong, and look at the relative strength here. Relative to the pharmas, it's been one of the strongest stocks. And relative to the S&P, even though the pharmas haven't been that great, this stock has held up well and near a 52-week relative high to the S&P. Ally Financial, we've talked about this one. They report next week, continuing to show strength here. Look at that volume. Look at the relative strength versus the banks. Now, the banks still concern me as a group, but Ally, despite the group not performing very well over the last year, Ally has continued to strengthen on a relative basis to its peers and to the S&P 500, and it's hard to ignore the volume that's been coming in here. ASML, this is a semiconductor stock breaking out to a new high, testing a year ago high, but the semiconductors you can see still well off the high that they had back in April. So what that means is this is a stock over the last 2.5 months that has really strengthened versus the semiconductor peers. So I would throw this into a category with like the applied materials, advanced micro devices, and some of the others that are showing relative strength in the semi group. I expect a strong report out of ASML. BlackRock. All right, some of these asset managers, the group overall still struggling, as you can see, versus the S&P. This has been a bad area, but if there's maybe going to be a shining light, BlackRock could be one of them. One of those shining lights. You can see relative strength versus the group has been moving up. It's actually breaking today to a new 52-week high. I mean, we're near, on an absolute basis, a 52-week high, even though the group is way off of where it was a year ago. So BlackRock's been a consistent outperformer. If this group wants a boost, I think they're going to need to get it from a stock like BlackRock that's been a leader. Blackstone Group, another one within the asset managers group. Look at this stock breaking to new highs. This 2019 has been very strong for Blackstone, and you can see on a relative basis it was picking up, but in April it really began to go. Look at the volume coming into the stock. A lot of folks moving into this, a lot of accumulation. We'll see, but I expect Blackstone Group to have a good report. Citigroup, looking at the banks, Citigroup breaking out versus the banking industry, and you can see not too far from a 52-week high. Citigroup looks good. CCI, Crown Castle, breaking out. Look at the volume coming in late May, early June as it makes this breakout. Always like to see that. Uptrend, cup, handle, breakout, heavy volume. The measurement right there would be roughly 10 points from 129. We got up to 138, so we got pretty close to the measurement. Pulled back, held the breakout level, and you can see just recently setting a new relative strength high versus its peers. Crown Holdings, CCK, breaking out. Again, volume picking up as it makes this move for a breakout. Relative strength consistently building throughout the year. Canadian Pacific Railway. Now, this is a stock that has been performing very strongly, very consistent to the upside. Railroads have been going sideways the last couple of months, down a little bit from where their high was in May. But look at Canadian Pacific Railway, where it was in May versus the high and where it has gone the past 2 months. So we're looking at a stock that's been up probably about 7%, while the group overall has been down probably about 5%. So what's that result in? Relative strength, new high relative to the railroad stocks. Expect a good report out of Canadian Pacific. Cintas Corp, beautiful move. This is a pretty good industry group as well. This group's been outperforming the S&P, and Cintas has been outperforming its group and the S&P. This has been one of those companies that you just want to own. Anytime the stock's moving up and on a relative basis, it keeps moving up. This is a type of stock that I would want to own. Showing really no signs of let up at this point. I would expect another strong report there. Danaher Corp, beautiful move up. I mean, talk about a medical equipment company. Medical equipment company breaking out to a 52-week relative high versus the S&P. And you can see Danaher, after a strong move, continuing to go for this ride versus the medical equipment group. So really good overall momentum to the upside. Nice volume trends. Danaher should have a nice report coming up. Dover Corp, big breakout, heavy volume late June. Look at the relative strength. Just set at the end of last week a new relative high versus its industrial machinery peers. Looks good heading into earnings. Gentex, now this one will be a very interesting stock to watch because the auto parts have been so weak relative to the S&P, but this stock has been very strong within its peers, and it's actually been uptrending versus the S&P despite being part of a group that's been so weak. So a lot of volume coming in on this move to the upside. Saw heavy volume at the end of June, but no real breakdown. I'm okay with heavy volume as long as we're not losing any major support levels. So I think 23.5, 24 area should be pretty good support. And I think the stock is setting up to have a good report, but will it matter if it's in a group that's being shunned? That will be answered next week. Honeywell breaking out to a new high last week. That was nice. And when we look at it relative to its peers, very strong group, or very strong stock, I should say. Not a particularly strong group, but Honeywell, one of the leaders within the space. Next up, JP Morgan. Talked about this one of the largest banks and also one of the best banks in terms of relative performance versus the banking index. Near a 52-week relative high. It's been doing okay versus the S&P 500, and considering the bank group has not, that speaks volumes, I think, for the stock. If banks are looking for a catalyst, JP Morgan will be one of those that's going to be reporting early in the earnings season next week, and a good report here might help and might become a catalyst for the banks. Kinder Morgan, you don't hear me talk too much about energy stocks, but among the pipelines, and you can see pipelines have actually held their own in 2019 versus the S&P, and Kinder Morgan has been one of the leaders. So if you're an energy fan, and especially a pipeline fan, you want to see a good report come out here with a strong reaction. Kansas City Southern, another railroad. I actually own this one, so I want just full disclosure there. This is a stock that just at the end of June, not last week, end of June, broke to a new about a 9-10 month relative high versus its railroad peers. Railroad's been holding up pretty well. I think this is a stock that ultimately is going to get this breakout above 125. Earnings could do it. Manpower, MAN, beautiful move to the upside. Now the group has been rolling lower on an absolute and on a relative basis, but Manpower clearly one of the leaders. So if you're in this group and look at the volume that's been coming in on this move back to the upside, I think if you're in the group or you're in this stock, obviously if you're in this stock, you want to see a strong report next week and some follow through to the upside. Microsoft, big report next week for the software group. I mean, software has been a leader. Microsoft has been a huge leader in 2019 within the software space, seeing a little bit of a relative pullback as it consolidates. So the group's broken out. Microsoft is just consolidating. No big deal. Microsoft had already broken out. So I think it's fine as long as it consolidates, but we do want to see a strong group or strong report next week and a nice reaction. Next up is M&T Bank. All right, another bank. Again, bank's not doing so great, but M&T not far from a 52-week relative high. I wouldn't say it's been as strong as some of the others like Citigroup and JP Morgan, but I think it has been pretty strong. And if it can just get through this 175 to 177 area, you can see Friday, we got up, we tested that area, haven't broken out yet. Maybe the earnings provide that catalyst. NVR, looking at the home builders, beautiful move up, sideways consolidation of late, but on a relative basis, it continues moving up. Notice home builders actually at the end of June went down and put in about a 2-3 month low, and NVR is continuing to put in higher highs. So lower lows for the group, higher lows for NVR, which I find to be very bullish. That is resulting in outperformance. I believe this is a stock that is going to have a strong report, maybe some strong guidance as well. NVS Novartis, big breakout to the upside occurred back in late May. It's continued moving up, pulled back testing that 20-day moving average, but look at the relative strength versus the pharmas, another leader here along with Abbott. OMC, Omnicom Group. I know this was a stock that my good friend John Hopkins had out over at Earnings Beats when it came back down. I think we talked about this maybe last week on the show. Came back down to this gap support area and then turned back up. It has broken out again. And look at the relative strength versus the media agencies. So I think you've got a stock that is anticipating very, very strong earnings. We'll see what happens next week. Progressive Corp, PGR, in the insurance area. Since the end of December, it's been straight up. And not only that, but the group's been straight up and the relative strength has been straight up. This is a very strong stock within a strong group. All right, a handful left here. PLD, Prologis, another group area that had broken out recently. You can see breaking to a 52-week relative high versus the S&P. The group pulled back recently, though. And so as a result, we saw PLD pull back. But notice what happened. Came right back up. So as soon as the group started to show strength again, we saw leadership in PLD. So I think we got a nice looking stock here off the move higher, little cup, maybe a handle forms. This one looks like it could benefit from its earnings report next week. PNC, another one I like on a from a banking perspective. I've talked about that recently. I like the breakout above the 137.5 area, the volume coming in on this push to the upside, and there's your relative strength. Pool, P-O-O-L, SCP Pool Corp. Beautiful move up, nice relative strength. Sideways consolidation for the recreational products group, though. Pool has been one of the strongest stocks within the group. So if you get a bounce in the group, chances are you're going to see a move higher in Pool. Another one reporting next week. PPG Industries, taking a look, you can see we had a high back in April around the 120 area. Got close last week. We're backing off of it. But the overall uptrend relative to its peers still intact. All right, SAP. This is one of those that I think is going to have a blowout quarter. Look at the volume coming in to support SAP on this move to the upside. SAP. Look at the relative strength, which had been lagging versus software for a while. Now all of a sudden, SAP is moving up, not just because the group's moving up, but it's actually leading the group. And look at the volume to support it. I think there's a lot of accumulation here on SAP. I would be looking for a really strong report next week. And then the last one I have is SON. Beautiful move up, breakout in the group. And you can see even though the stock has pulled back on a relative basis, mostly it's just because it was consolidating prior gains. I still see a beautiful uptrend in play, and I expect that it's going to go higher. But before we bring up a summary, I do want to mention this afternoon that I will be doing a webinar with Earnings Beats. And if you like this relative strength talk, I'm going to be talking about the second half of 2019 and how I would be looking at certain areas in the market. Also talk about the overall market, the big picture, and what I see coming. But I do want to talk about the industry groups and where I would be looking to put my money, areas that I would be staying away from. And if this interests you, check it out at earningsbeats.com. There is a July 4th special. You click on that and you can sign up, and it will get you a seat to the webinar this afternoon. All right, Dan, here is your summary. I did go through a bunch of them. I'm all out of breath. So, Erin, I'm going to let you hopefully go through the RRG for just a minute or so while I get a drink of water.
Absolutely. I do have the RRG. So let me get that up here for you. Not too many requests, so I think people were very interested in our Monday setups and in the earnings spotlight that you just showed. That was a lot of stocks. All right, so here is the RRG. A lot of them traveling in the wrong direction. I found that to be kind of interesting. There was one here that didn't, and I do have the CW on there. It was one of the few that's traveling in the northeast direction, which is what Julius tells us, the creator of the RRGs, that's what you're kind of looking for, are those northeast travelers. So as far as our sectors go, usually it's led by consumer discretionary and technology, but certainly not as much interest there. Healthcare seems to be what everybody wants to see. So I do have a couple of those in the queue, but let's go ahead and start with the first one, which is Ericsson.
All right, Ericsson, I think, is just sideways consolidating. I didn't like this pullback here below these moving averages, but you can see it did hold the prior lows, has moved back up. I think right now it's consolidating. The problem I have is that it has moved to a multi-month low relative to the telecom equipment group. So telecom had a beautiful move up, and so did Ericsson, but telecom's not far from a breakout, and you can see Ericsson has struggled. So that's what's creating this relative weakness in the stock. I don't know. I think $9.40 and $9 is an area that I would be watching. I think because of the relative weakness, I would maybe be looking for something else. But the volume trends, if I had to, pin my hopes on something, it would be the fact that the volume during this weakness has been much lighter than what we saw during this huge move up and what appeared to be some solid accumulation. So mixed signals here for me on ERIC. I would just really pay attention to the support level around $9. No reason for it to break below that.
Okay, let's see. The most popular in the chat room, I thought it was going to be Shopify, but no, it turns out to be IONS, IONS.
Yeah, this was a stock that I was watching pretty closely and owned for a brief period of time because it's in that biotech space. I was seeing, the relative strength picking up. It had a positive divergence, which doesn't show here, but the lower lows at a higher PPO. So, but what that tells you is you want to expect a 50-day test, which we got last week, and then we've rolled back over again. So I think we just have to be really, really careful here on the stock. So what I would annotate on this chart is, biotechs have been weak again the last couple of days. So that's part of what's going on here. But I don't want to see it break back down to a new low. So I would just watch the $62 level pretty closely.
All right. Next one up is Halliburton. How?
Haven't seen this chart for a while, but I have to assume I'm not going to like it before. Yeah, I'm not going to like this. This is the exact opposite of what I want to look for. And you know what? Halliburton may at some point in the near future start to turn its chart around. And when it does, I'll be all interested in it. I'm a momentum trader. I'm not trying to find a bottom. I'm not a value investor. So I'm not going to be looking for stocks for value. I want to see that Wall Street is interested and that a stock is being accumulated. And when you look at a chart and you see these arrows all pointing lower across the chart, that is the exact opposite of what I'm looking for. I want to see everything moving higher. So yes, from a value perspective, maybe you could begin to make a really nice argument for Halliburton. But I want to see more than value. I want to see momentum. And we're not really seeing that yet. Volume's been heavy here. I don't know if there's more, is this a redistribution area under Wyckoff, or is this is there some accumulation taking place? We really won't know until we see whether or not we get the break to the upside or the break to the downside. I think it's too early. I would stay away from Halliburton.
All right, I have a financial up for you next. James River Group, and that is JRVR. Nice breakout. I'm liking it because of the PMO moving up, but hey, we'll see if you agree.
Yeah, I do like this one. This is exactly what I was talking about, where you're getting relative strength across all of these charts, which I think is really important. The volume on the latest breakout tells me that maybe it might run out of steam just a little bit in the near term. I would rather have a little bit more volume on the breakout, but I would be surprised if you lose 45.5. So I think that any kind of a pullback, maybe to test the 20-day moving average, or maybe even this price support level at 45.5 would be a solid entry point.
All right. We haven't looked at this in a while that I'm aware. Comcast, CMCSA.
All right, Comcast. Yeah, I'm kind of liking this pattern actually quite a bit. Volume coming up here to start off and put in what could be the breakout move to the upside after we put in a reverse right shoulder or an inverse right shoulder. While we've been in consolidation mode, and by the way, it's not really that bad if a stock underperforms while it's consolidating. A stock's not going to go up and outperform its peers all the time. So you want to see an uptrend during consolidation or during a continuation pattern. I think it's perfectly normal to have a stock underperform for a little bit. So what I would be looking at here on this chart is a neckline right about there. So here's your uptrend right here. So you need to have an uptrend in order to have a continuation pattern. Here's the left shoulder, neckline, lower low puts in the head, right side of the neckline, right shoulder, and now we're making a move back up. A breakout above 43.5 would measure another $3 up to about 46.5. I like the stock unless it were to break down below that head, 40.5. I would suspect we're going to see a move to the upside here on Comcast.
All right. Let's see. NVTA. NVDA.
NVDA or TA?
TA, I'm sorry. Kind of flaggish. I don't know. I mean, it looks all right. I would be remaining holding it if I had bought.
Yeah, this one is just, it's got some, this is a mixed one for me because it is outperforming the biotechs, which is good, but the biotechs are underperforming again, which is bad. It's got this gap resistance that it's trying to battle through right now. You can see the gap down on massive volume. So we filled that gap now. This is clearly an area where we could go back down. But from a bullish perspective, you can see that we are holding the rising 20-day moving average on these pullbacks, which tends to be good news for the stock. So I think what I would do is watch that rising 20-day moving average. It also is an area of the last breakout. So in this uptrend, up, down, there's the move up that breaks above 22 with increasing volume. I would watch 22 to the downside. I'd be okay with it as long as 22 holds.
All right, let's look at Sangamo Therapeutics, SGMO. Sort of a parabolic forming here, but I still like it.
Right, SGMO. Yeah, I mean, it's getting close to some overhead resistance after gapping up. Went down, filled the gap actually to this prior price support, now moving back to the upside. It is starting to show nice relative strength versus biotechs, and it's on the verge of moving to about an 8-month relative high. So that is one thing I certainly would maybe annotate here, is on a relative basis, you can see this is a key area, and we're almost there. So if we could get that breakout along with a breakout above 14, I think you would really see the momentum start to pick up. Now, if you wanted to try and time it a little early, I think if you fill back down to that gap support right there at about 11:30 or so, that would be of interest to me as well.
All right, let's see. Next one up, Twilio, TWLO.
Yeah, this one's been a leader for quite a while, and starting to strengthen today. Yeah, that's nice. Software's down today, but Twilio leading to the upside, up about 3%. And you can just see the overall performance. Again, another relative leader in the software space. This is going to be one of my favorite stocks. Continues to trend higher. So when you get pullbacks, that's really what you want to look for in a stock like this. So I'm going to say the last low around 133 is pretty good support. And perhaps the best support is going to be around just down above 120, where we've had multiple tests down there. So let's say the market weakens over the next few weeks in the summer, and the stock pulls back into that zone, that would be a really interesting area. Now, I think the stock is going to hold above that. I believe the market's going to go higher, but I'm just saying if you're a little bit more skittish about the market, you think we're going to pull back, I would wait. You might be able to get this stock, one of the software leaders, maybe even back into the 120s, which would be a great entry.
All right, let's see. We have two more. Let us go with CW. As I said, this one was the only one traveling in the proper direction as far as the RRG goes.
Yeah. Again, mixed feelings here. I like the volume coming in and this move to the upside. You can see the relative strength building. But we've seen this before. We've had some big pops on the relative strength within defense, and it doesn't hold. But this one looks like it has more staying power because it broke out above that high right there at the end of February. Notice that move. It came on one of the heaviest volume days of the year. That's what I want to see. I would just say this. It hasn't been a great relative performer. If I was in it, I would watch that 20-day moving average. If I close back below the 20 and this relative strength line continues to drop, I would be out of it. So I want to keep a tight stop, but I do like some of what's been going on in the short term here. Again, when I've got a relative performer that's maybe not quite as good as I'd like, then I want to make sure I keep my stops in play. But yeah, the stock I think looks pretty good with the heavy volume supporting that breakout.
All right, this one looks interesting to me. American Homes for Rent. It is a residential REIT, AMH.
All right. Yeah, I like this one too. I mean, on a relative basis, it's doing okay. It's been trending higher, I would say, the last 7 or 8 months, but the group has been really strong. So you've got to, and I think that's residential REITs, DJUSRN. So, and I think you said residential REIT, didn't you, Erin?
Indeed, yes.
Yeah. So this is a stock that is performing pretty well relative to its peer group, and the peer group has been performing pretty strongly versus the S&P 500. So I agree. I think this is one that I would be okay with. I'm not really big into real estate just because I think there are other areas in the market that will outperform real estate going forward. But this is a trading range that I would watch pretty closely on AMH. I think anywhere between the 24 and 25 and a half area is just consolidation for now. As long as the stock stays above 24 on a closing basis, I would be okay with it. Overall, volume trends look good, uptrend in play. And again, relative strength, not bad at all.
All right, that does complete the 10 in 10. Here are the symbols that Tom just finished annotating. I'll have these up in the MarketWatchers live chart list at the end of the show. Just go to the articles tab from our homepage, click on the MarketWatchers live blog, and you will find the link to that list right there at the top. All right, I'll be back with the final market update right after this.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
It's time for the final market update. We did see the markets really open on a down note, but it does seem we're starting to consolidate those losses from the morning, moving mostly sideways for the Dow. It is down just a little over 122 points. S&P 500 down 16.5 points. The NASDAQ also had a really difficult morning. It is down almost 72 points. New York Stock Exchange, the NYSE, also a difficult morning. It is still setting some new lows as far as intraday lows. S&P 400 continuing its slide lower, as well as the Russell 2000. We were starting to finally see a little bit more strength in those areas, but now we're starting to see a little bit more weakness again. Treasury yields are lower on the day, current reading at 2.034%. The VIX is higher, and we're looking at readings at 1427 currently. Let's look at UUP. The dollar is up, moving mostly sideways, and gold, not a surprise. GLD is lower, about 0.3%. USO oil started off the morning pretty well, but it has been pulling back to last Friday's close, staying in positive territory, though, up 0.6% at $12.02. TLT, big gap up, starting to pull back, though, a little bit, reading 132.91. Let's look at our sector summary and see which groups are leading the pack. And as you can see, with a scooter of 14.7, energy seems to finally be coming a bit more to life. It is now leading at 0.43% to the upside, followed by real estate and consumer discretionary, the only three that are in positive territory. Big loser right now is the healthcare sector, down over 1%. And that's all I have for the final market update.
All right, I wanted to take a look at the German DAX. We talk a lot about U.S. stocks, but this is a long-term, this 15-year weekly chart on the German DAX. And I bring this up because I know there's been a lot of popular discussion about how foreign markets have been in a bear market and have been lagging the U.S. They certainly have been lagging the U.S., but I think they remain in a bull market. I think that what the DAX went through here to the downside, very similar to what we saw in 2015, 2016. What I'm most focused on is when the stock, when an index like this does have a period of selling and prints a bottom, like it did back in 2011, like it did in 2014, 2016, 2018, they continue to put in higher lows, higher highs, higher lows. That to me spells an uptrend. I think that we are going to break out globally. I think that a lot of the money that has been pouring into treasuries around the globe is going to eventually come out of those treasuries and fuel a global stock market rally. So I would look at a chart like this from a longer term perspective and be quite bullish about it. I know that is maybe not in agreement with some others who may be looking at it a little differently, and that's what makes a market go round. But I do think when we take a look at the trend lines, you can see once this trend line was broken on the DAX back in 2016, we had a huge move. I think we are just making this breakout. And look at the PPO, the weekly PPO when we've made these breakouts of these trend lines. So right here, take a look at what we were doing on the weekly PPO. We had struggled to get through the center line, but we finally got through, started to show some strength, and then we took off. Here, we've been struggling below that center line, but now as we're making this break, I think the PPO is very similar to where it was. So I'm looking for some continuation to the upside in the DAX. And the DAX, by the way, is the one that most closely mirrors the S&P 500 among all the foreign stock markets. So this is one that I tend to watch pretty closely, and I do like what I'm seeing in the German DAX right now.
All right. Really interesting stuff there, I have to say. I know we look at that chart. You look at that not often enough for my taste. I do like it a lot. But let's go ahead. It is time to move into the sentiment update. So let's go ahead and get started here. All right, so this is going to be your DecisionPoint Sentiment update for July 8th, 2019. I'm going to be covering quite a few sentiment indicators. We're going to look at the put-call ratio, the American Association of Individual Investors, or the AAII. We have the National Association of Active Investment Managers, or NAME. So we're going to look at where the big guys are putting their money currently, and that should give us a pretty good feel for the market sentiment. RIDEX ratio is DecisionPoint's own indicator for sentiment, and I'll talk more about that when we get to it. Wall Street Sentiment Survey, Mark Young of Wall Street Sentiment Survey. He gives the market timers every week an email, including myself and my father, and we give him our what we think is going to happen to the market the very next week. So I really like this sentiment survey just because it is so very short term. We will, of course, look at the VIX, which I think is an excellent sentiment indicator. And then we'll finish looking at some gold sentiment using the discounts and premiums for the Sprott Physical Gold Trust. All right, so let's go ahead and get started right now with our put-call ratio. Interestingly, I've been watching it. It's been rising, and now we hit that overbought territory, and notice we are finally turning down for these put-call ratios. I invert this scale simply because I like to see overbought territory on the top and oversold territory on the bottom as far as price is concerned. So when I see the put-call ratio getting smaller and smaller, that means everybody's getting more and more bullish, and that gives you that sentiment reading. So we're seeing a lot more bulls at this point, and now it is starting to tip over. And typically when you see that, that's when you start looking for that price decline. And I didn't mark these, but you can see they typically come in at the right time. And so that's one of the reasons we like to watch the put-call ratio. All right, next up is AAII. If you go to AAII.com, you can take this sentiment poll because it's pretty much everybody who is interested in doing that. Unfortunately, I don't think it's telling us that much today. We did get an improvement or a move to the upside for bulls. We're looking at about a third of the respondents giving us a bullish ranking for how they're feeling currently. There is no time period really listed on that particular survey, so it's just how do you feel right now? And this number comes in at the end of the previous week. You can see that we're staying about the same for bears. We're not getting really much more bearish than we already have. In fact, we're increasing bulls somewhat. The ratio, though, however, is pretty much right in neutral territory because, look, we have almost the exact same number of bulls as bears. So a third are bullish, about a third are bearish, and then there's that third out there that are neutral. So I'm looking at this, I see that rise in bulls, and that tells me, because sentiment is contrarian, if people are getting very bullish, that's when you usually look for that price reversal to the downside. So I think this one is showing, as far as those readings, I would look at them as somewhat bearish for the market. All right, we're going to move to the name exposure index. And like I said, this is basically a survey of active investment managers. So people who are handling a lot of the money out there. And we like to see how exposed they are to the market. And they do report that to us every week. As you can see, we are starting to see more. We're seeing more exposure, but overall, I wouldn't say that it is an exceptionally climactic reading because you can see we've had a lot of these readings that are higher than what we're looking at right now. But they are exposed, and it did increase. So we have to look at that as I'm looking at it as mostly neutral, but they're getting a little bit bullish as far as their exposure with their money. And so I look at that as somewhat bearish that they are increasing that. But we don't really have those climactic, really stretched out readings that you usually see before a price decline. All right, next up is that Wall Street Sentiment Survey. And you can see it's just been really wacky, is the best way I can explain it. Back and forth, back and forth. Last week, or the week before, we had a spike in the bulls, a big pullback as far as bears. And then what happened this week? Pullback in the bulls and a big spike here for the bears. And it's really been typical when you look at these readings going across. So for me, it's easiest to look at what's going on with the bull-bear ratio. And when the number is very small, of course, that means you're seeing more bears. And if it is larger in that ratio, that means you have a lot more bulls. And right now, the reading, well, it's 1. So you couldn't get much more neutral than that. We have 40% are bullish. We have 40% that are bearish. I think the only thing I would look at is that we have a lot fewer that are in that neutral position. We actually are starting to see people take a stand. And, with that, as far as the market timers go, we've switched gears and we're still looking at it even though as to what we quote unquote are thinking. And you're getting that pullback in the bulls and you're starting to see people get a bit more bearish. And that typically is bullish for the market. However, one of the things I do point out with the Wall Street Sentiment Survey is that because it is so very short term and it is market timers, a lot of the times we're right. So I'm looking at this increase in the bears, and I will read these as neutral, but I have to say that seeing a little bit more bears right now, I think you could say that going into next week, it is somewhat bearish. All right, next up. This is the RIDEX asset analysis chart. And this is the one that my father, Carl Swenlin, came up with. And what we do is we look at a group of mutual funds that are managed by Guggenheim. They used to be called RIDEX, but they're a closed group of funds that we look at. And there are the bear funds, there are an equal number of the bull sector funds, and then we look at the assets that are in the money market. So every night, RIDEX Guggenheim reports how many assets are in these funds, and we watch the money flow. And I think that is what gives you an idea of what is going on. So I'm looking at this chart. I'm going to go ahead and annotate it a little bit because I'm seeing a little different right here. We're about even on the bear funds. It looked to me earlier, prior, we were getting kind of an increase in the bears and we were seeing an increase in the bull funds. The main thing I'm kind of looking at right now are, we're seeing less neutral money. You saw that in some of those surveys. So people are taking a stand right now and investing one way or the other, but they're putting their money back into the market. And I'm looking at this, and as far as the bears go, we're about even from where we started last week. And we are seeing still that decline going on with the money markets. But look what's happening to the equities. We're seeing a lot more activity there. The assets are getting larger as far as those bull funds. And again, sentiment is contrarian. So when people are investing their money and throwing it into those bull funds, that means they're very bullish, of course, and that is bearish for the market. So something to consider at this point is that increase in the bull assets. And, I look at that, I see this decrease in the money markets. And like I said, we're starting to see people take a stand, not watch from the sidelines, getting involved, whether it's hedging as far as those bear funds go, or whether it is, getting more bullish in that they're throwing their money into those bull equity funds. So as I look at this, I would say that participants are mostly bullish here because they are putting more money in and those neutral positions are going away. So I would be looking at this as somewhat bearish for the market, the fact that people are getting more bullish with their money. And again, this is the reason this chart really works, I think, is because it is real money. Those AII name, even the Wall Street Sentiment Survey, that's all how I feel now. Let me click the survey. Pretty easy, but this actually follows the money. And looking at the money, people are getting more bullish, and that would be bearish for the market. So I'm looking for more in the way of a pullback, even from what we're experiencing today. All right, let's go ahead and move on to the ultra short-term indicators that I follow. This, of course, has the VIX and also breadth. And I find this to be excellent reading for sentiment in the very, very short term. That's why very short term. So what I wanted to point out is that last Friday, we did end up with a buying exhaustion, in my opinion, at the time. And, we were looking at this with my dad on the Friday DecisionPoint show. You can go to the YouTube channel for StockCharts. You'll find it there. But we called it an exhaustion because we got a lot of these net advances minus declines, really high number here, almost at 400, which is near the very top. And then you can see that the VIX, for a third time in a row, penetrated that upper Bollinger Band. And again, I do invert my VIX because, again, overbought should be at the top and oversold should be at the bottom in the way I read this particular chart. But notice on Friday, we ended within those Bollinger Bands. So we had this spike we had this buying exhaustion matching up with a pullback on the VIX back into those Bollinger Bands, but right after an upside penetration, almost always you're going to find the market taking a little bit of a decline or a pause like we saw back here when those upper Bollinger Bands are broken on the VIX. So right now, though, we're starting to get readings that are a little bit closer to the middle toward the average right at about 15. So I'm looking at this chart. I don't think it's telling us that much, except for we did get that exhaustion. And so usually that is a good temperature taker for the next couple days. So that's the reason I would continue to look for lower prices right now in the very short term. All right, gold. Let's see, which one did I want to show you? Oh, I want this one. Here we go. The weekly chart, I think, for gold is really more interesting than the daily chart, mainly because I really like to spotlight this breakout that we did have this past month, in the past 3 weeks. You know, we moved to prices for gold that we haven't seen in multiple years. And so I think that breakout is extraordinary. We had, if you look at this, you've got rising bottoms on price and then really a straightforward even tops. And that is a longer term ascending triangle. And ascending triangles are bullish. The expectation should be a breakout. How high should it go? Well, it's the unofficial back of the napkin calculation is looking at the back of the pattern and how wide it is. And that would tell me we're looking for a move goodness. So about 11, let's say 1050 all the way up to 1350-ish. So a $300 move to the upside. That would put us, well, goodness, right around 1700, close to the tops we were seeing back here in 2012 and 2013. Now, I don't know that we'll necessarily get that high up there, but that's what the pattern is telling us. I think the breakout is really looking good. PMO's on that buy signal. But let's look at the sentiment. The sentiment is we measure the discount and premiums. And as you can see, when you look back on the discounts, they are starting to move lower. And that means people are starting to get a little less bullish. But I'd say overall, we're still looking at elevated readings here. I think we're still looking at good things coming forward for gold. Right now, we've pulled back toward that breakout point. So I would be looking for a move to the upside here on gold. All right, that pretty much is it. Let's go ahead. I'm going to wrap this up. Give you kind of a summary of what's been going on here that I just talked about. And I'm going to look at the right-hand side that tells me what, what I analyzed in terms of what the sentiment is telling us about the market. Again, it's contrarian, so it's easy for you to just, this is what we're doing here. So the put-call ratio, we're looking at very bearish for the market. AAII is leaning that way. Somewhat bearish for the market when you look at the exposure of the active investment managers. I'd say that we were neutral, and I could even say a little bit bearish on the Wall Street Sentiment Survey, but I'm going to call it neutral right now. And then we'll look at right-X ratio, somewhat bearish for the market because we are starting to see those gains in the equity funds, but we're also seeing a little bit of a gain on some of those bear funds. Breadth and VIX really neutral right now. We had that buying exhaustion. It's passed. But like I said, we could end up seeing a little bit more downside or sideways action. Gold sentiment, we're looking at that neutral to bullish for gold. I do like gold still. I think it's going to continue to outperform. And here you go, sentiment. Here's the tally. When you look at all of these put together, I would say neutral to bearish based on the sentiment. So as far as the market goes, I am moving neutral to bearish for this upcoming week, at least based on the sentiment. That's all I have for the DecisionPoint Sentiment update. So time to wrap this all up. Tom?
Yeah, I just wanted to add, too, that this is the time of the calendar month when the market does tend to pull back the 7th to the 10th, historically. When you go back and look, the 7th to the 10th has produced annualized returns on the S&P 500 of minus 5.78%. And you might say, well, that's just 4 days. Well, it's 4 days every single month for the last 7 decades. So it actually translates into about 2,400 days, which is probably the equivalent of about 9 years. So imagine going through a period of 9 years where the market went down 5.78%. Wouldn't be a fun period.
No.
So just keep that in mind, that normally the market goes up beginning of the month, and then we have a period of profit taking that is kind of normal, and that this seems to be kind of fitting that theme.
Yes, absolutely. Well, I'm looking at this poll and I'm just shocked because my picks are always the bottom two, it seems like. This week, I got the top 2 spots, so I'm happy about that.
Yeah, I think, like I said earlier, I think RNG looks pretty good. It's continuing to move higher here, by the way. It's gotten through the 20-day, which it did on Friday, and went back and tested the 20-day today and is broken back out to the upside and up pretty nicely. So, yeah, I like RNG. I think that's a really good pick. And I wouldn't be surprised to see that stock make a run up into its earnings report because it is a relative leader. So Wall Street likes it. It's been consolidating. So it's kind of it's struggled a little bit on a relative basis while it's consolidated. And I'll bring a chart up in maybe a minute or so. But let's take a look at some of these other results first. CMG 19%. Okay. VCY. Yeah. I'm surprised VCYT is up there only because a lot of folks are probably not too aware of it. And the one that really shocks me, Erin, is AMD on the bottom.
Right? I was thinking the exact same thing, that, tech usually is the darling when we do these setups, and especially names that people recognize. We usually see them near the top. So, I thought that was pretty interesting.
I like AMD, actually. I own it. I think it looks really good right now. I mean, the volume starting to pick back up a little bit. It's trading right now. It would close at its highest level in about 3 to 4 weeks if it closes where it is right now at 31.76. So I don't know. I liked AMD. I thought that was a pretty good one as well, but folks not agreeing with me.
Yeah. Hey, there was a question in the chat room. I know we have about a minute left. And their question was, what are the best books about trend trading that you would recommend? I know Greg Morris has some great information, some great books out about trend following. That's pretty much his shtick, if you want to call it that. And then, of course, I've always been a huge fan of Alexander Elder and Tom. I mean, who are the other two?
Well, John Murphy and Martin Pringer on that list.
Exactly.
Yeah, and, Arthur Hill's written books, Greg Schnell. I mean, you got a lot of commentators here at StockCharts that are published authors, and, they got a lot of great information. So go to the StockCharts bookstore. I'm sure you can find some great selections.
Yep. Oh, there's AMD.
Yeah, I pulled up AMD. I wanted to show this one because, again, when you look at it, look at the relative strength building here versus the semiconductors I mentioned earlier. Back in the beginning of June, look at the volume coming in. AMD was one of the top performers in the semiconductor area, and on a relative basis was at a 52-week high. Went through a period of consolidation, pulled back on a relative basis, and now you can see that strength starting to build again. So I own AMD, so full disclosure there. But I really like the stock. I think it's performed well, and I think it's going to go back up and take out the high at $34 and move up. But the other one I wanted to mention, too, while we still have a moment, was the RNG, which, of course, is your setup for this week.
Yes, I'm so excited.
Yeah, on this relative chart, same thing, end of May, trading at a 52-week high. The stock has been consolidating, pulls back, but now starting to show relative strength again and beginning to break out. And look at the volume as it comes off the bottom. Hasn't been light. So I think RNG looks really good.
Yeah, I'm pretty excited about it. Maybe I'll have to go and find something to put in it.
All right, we got to wrap things up. I do want to thank all of you for being with us today. Please remember to complete the survey. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we will see you back here tomorrow. Happy trading.